would you say if I said that home prices in Oahu are at the highest they have ever been? Would you call me a liar or would you call me the truth sayer? Well, I will tell you what. I am the latter, not the former. We're going to get into that and more on this week's housing market update. First, we'll start off with, that's right, the big three. Prices are up. We're going to go over that. Inventory is pretty steady overall. And then interest rates. Man, interest rates shot up this week. Yeah, it wasn't good news. We'll get into that. We'll show you some of those numbers. But let's break down the headline news. Oahu home prices hit an all-time high. Yep, that's right, man. Put it out in neon lights. Oahu home prices have never been higher. We'll break that down here in the Honolulu Board of REALTORS housing market report for the month of June. Existing home sales, and this is a nationwide report, the existing home sales are down across the country, but guess what? The home prices are up. You'll be interested. There's some pretty good facts in that one. And then we got the UHERO. This is a University of Hawaii Economic Research Organization. They spoke at a North Shore Regional this week and had some interesting takes on what they believe the outlook is for the housing market and interest rates in Oahu over the course of the next couple of years. And then we're going to talk about, folks, today, Trump accounts. That's right. One of the best investments for young children out there. We're going to break it down. A lot of doubt, but I tell you what, I'm using it and you probably should too. And then we'll get into the VA rates outlook really for the week and kind of give you a breakdown of why interest rates went up. The Oahu housing market update for June, the monthly stat report came out from Honolulu Board of REALTORS this week. And I tell you what, rates and headlines move very fast. But the tail of the tape is in the data that we collect, or that HBR collects every month on the sales on island. And let me tell you what, this is it for sellers and buyers. This is what you need to look at. Rates, that's just the chat. That's just the clouds, all the smoke. What is happening with housing? And we're going to go over this week, we're going to go over closed sales, new listings, median sales price, and days on market. And these are the numbers that tell whether it's a buyer's or seller's market across the island. All right, let's take a look at June 2026 at a glance. We had two separate markets here, really. You got single family homes and you got condos. Single family homes, it is a soft buyer's market or maybe a soft seller's market. It really depends on where you're looking on the island. Soft buyer's market on the leeward side, strong seller's market on the windward side of Oahu. Condos, I think we're in a buyer's market, quite frankly, across the entire island when it comes to condos. Last month, 270 closed sales, which is down for single family houses, which is down 6.6% year over year. And median price, though, up 10.4% year over year. Now, again, the median isn't the average. The average sales price is a lot higher, actually. The median basically takes the number in the middle. And last month, there were a lot more homes that sold between $1.3 and $1.9 million, which brought that median sales price up, but still pretty solid. And here's the teller. Here's a telltale sign on whether you're in a buyer's or a seller's days on market. 13 days on market. That's the average days on market for single family homes. Last year was 24 at this time. Higher rates last year at this time, but 13 days on market. The inventory, lack of inventory, and the desire to own a single family home really driving these numbers lower on days on market. And hey, look at this. Sellers are receiving 100% of the list price. Now, I don't know if I believe that just in some of what I've seen, but I will also tell you this. On the west side, if sellers are getting 100% on their sales, they're probably also giving up seller credits. And that doesn't show in a lower list price, but what that does show is that they're not getting everything that they thought they were going to get. So, or at least what they're reported. So big news there. Condos tells a different story. We did have more condos sell last month, and that's because, hey, condos are more affordable. 397 closed sales, which is up 10.9% year over year. And the median sales price at $528,000, up 3.5% year over year. 40 days on the market, though. That's a lot. Flat year over year. We're consistent. The median sales price, days on market, everything with regards to condos has been consistent. And sellers are not getting their asking price. They're getting a little lower, 96.8. And so what's the bottom line here? 33% of single family homes are going above list price, which is actually up from the 27% last year. Active inventory sits right now at about 9.3% below last year, but we're still over 3,000 homes, single family and condo, active inventory, which is near 10-year highs for inventory across the island. This is a huge number, folks, and which reason why it makes it a very favorable market for many people across the island. Now let's take a look at closed sales. You can see that single family homes, they're up from over the last couple months, but still down year over year, about 6.6% on closed sales. And then you look at condos. Condos up, that's 397 sales in June. That's one of the highest numbers of closed sales for condos that we've seen in probably 10 years. That's a lot of condos. So if you're wondering whether people are buying homes in Oahu, well, these numbers will tell you the story. They absolutely are. So there isn't a drop in demand. There isn't. There's just not enough housing to meet the demands of the buyers. And sellers are able to sell at or near their asking price when they put the home on the market. Let's take a look at new listings. New listings were down a little bit for single family homes, but really down a little bit from month over month and down from last year, about 7.3%, but condos up 10.3% versus June of last year. So year over year, definitely higher. And again, let's go into the active inventory. We have a pretty high active inventory. And what this shows is, we do have fewer new listings this year. Fewer people are looking to sell, but the people who are looking to sell, they are going to get more traction because there really are more buyers, which is a surprise. Well, don't you think? Because we got higher rates. All right, not higher. We're actually lower than we were last year, but they're still above 6% on average across the island. And that's talking VA conventional. We're right around 6.5%. So still pretty significant. You can see a lot, pretty consistent high number of new listings for condos month over month. And then single family home, we're just never really going to get above 400, but we're pretty close this month at 369. Let's take a look at median sales price again, 1.242 million. That's 10% higher than it was last year at this time, and part of it has to do with the mix of homes. A lot homes in that higher market, 1.3 to $2 million range. That jumped 39.7% year over year. And I tell you, there are a lot of homes at Ewa Beach right now that are going. I have 3 homes in contract right now that are all in that 1.3 to $1.5 million range in the Ewa Beach area alone. You can see condos down on the bar on the lower. It's kind of steady low. And what's holding things back for condos? Hey man, it's some HOA fees. Some HOA fees are not low, and it has to do with hurricane insurance, and it has to do with repairs and reserves, and really in some cases HOA mismanagement. So really those numbers are keeping condo prices from going up. But if you can get in now on a condo below that, and I have a couple guys who just went into contract this week, condos that are under 400,000 and staying within their BAH. Pretty good if you ask me, because that's your goal, right? You don't want to overspend. There's a lot of opportunity right now in the condo market. All right, this chart here shows everything you need to see. Days on market, 13 days is the median days on market for single family homes. That is 45.5% less than it was last year at this time. That means the home is priced right. Your single family home, if you're priced right, you're gonna sell. And guess what? You're probably gonna get 100% of your asking price as well. Condos tells a different story. 40 days on market, same as it was last year this time. If you put your home on the market, and this is good for buyers, when you got 40 days on market, that shows that you're in a buyer's market. And you go down really any neighborhood that has townhomes and condos, you see multiple listings on the street. As a buyer, all right, you got to ask a couple questions. Why? Well, you know what? Probably because the HOA fees are high. But that shouldn't deter you necessarily, because now you have a bargaining chip, because you can shop for the best price on those properties. You go down, some of the streets in Ewa and Kapolei, you see 4 or 5 signs. You probably have a good chance of getting some seller credits to help you make that mortgage payment affordable. That's what my clients are doing right now. All right, so what does this mean for you? Well, there are 3 people I'm talking to right now. We're talking buyers, we're talking sellers, and we're talking realtors, my referral partners. If you're a buyer, single family homes are moving. You cannot be going under asking on single family homes. It's just not going to work. The numbers show that. Condos, you got some time. You're in a buyer's market for condos. You have some negotiating power. Inventory is super tight for single family homes. You can't be too picky. Obviously, you don't want to buy something that you're not going to be happy in, but if you're looking at, bargain and prices, this ain't the price is right. All right, you're going to be sitting in the stands if you don't get the price right, because you're not going to get your offer accepted. Sellers, I tell you what, price at the market, not over the market, and your home, single family home is going to sell. Condos, you're going to probably have to do a little bit of seller concessions, and lowering the price isn't always the right answer. Throwing out there a good credit, maybe to cover closing costs, maybe to cover closing costs, part of closing costs, and help buy down the rate. Again, it depends. If you're patient as a seller, then you go ahead and leave it. If you don't really want to sell, you can go ahead and leave it. But really, be proactive in offering credits to help make your home, your condo affordable. And referral partners, hey, you know what? Homes are selling every day. Homes are being bought and sold. If you're not buying and selling, if your clients aren't buying and selling, you got to look at what you're doing wrong and how you can really educate your clients on what they need to do to buy or sell their home. Share this with them. By all means, show them the numbers from the housing market report, the HBR report monthly, and show them where the numbers are. It breaks it down by price range. And I tell you what, it is one of the best tools out there, the HBR housing market report that comes out really the first full week of every month. A great tool. All right, let's get into the next bit of news. All right, for existing home sales, so this is across country. This is an Oahu specific. We were down last month, 2.4% month over month, up 2.8% year over year. But remember, last year interest rates were higher. Median home price, though, guess what? Up 1.8% year over year, up 2.2% month over month. So despite the higher rate environment that we're in right now due to the Iran war, higher gas prices, higher inflation, we are still have higher median sales price this year than we did last year. Inventory is down, which shows that, if the home is priced right, just like in Oahu across the country, if the home is priced right, it is going to sell. We got 4.6 months supply of homes. That is right in the middle, man. That is a balanced market across the country. It's all about location. Though some places where you have higher inventory, guess what? Definitely a buyer's market. Lower inventory, seller's market. 21% of homes sold above the list price. 33% of home purchases were first-time home buyers. That, my friends, is 1 out of 3 home buyers is a first-time home buyer. Don't let anybody tell you ain't no first-time home buyers. 1 out of 3 home buyers right now across the country are first-time home buyers. 28 days on market. That's a little down from where we were last month, but still pretty good number, and just shows really across the country, the housing market, despite a high rate environment, housing market is still steady overall. All right, we got a report. Actually, this is kind of my notes from a report given by an analyst at the North Shore Real Estate Regional meeting this past week, and it's by the gentleman's name, Dr. Summer LaCroix, not the drink, the person, and he works with UHERO, a representative of UHERO, which is the University of Hawaii Economic Research Organization. They research the economy, how the national economy is affecting the local economy. Really great report, great presentation by Dr. LaCroix, and a couple of things that they pointed out I really want to go over with you is, rates aren't coming down. That is their consensus. They think that rates are going to be in that 6% plus range really until about 2027. They think that the earliest expectation where the Fed will lower the Fed funds rate is going to be in 2027, November 2027, so about 18 months out. And then one of the concerns they have, and certainly a concern I have, is insurance and flood insurance costs rising across Oahu. We just had the Kona low up on certainly the North Shore region. We just had all the flood zones remapped. That's one of the reasons why they expect prices to go up. That's going to keep the market steady. It has nothing really to do with interest rates, but the cost of housing is going to go up because of that in the insurance side of the equation. So we got a couple of different stories though. We got condos, and we got single family homes. And really, this is kind of what I just talked about with the Honolulu Board of Realtors. But the condo market is pretty soft right now, and it's soft for sellers. It's very advantageous for buyers. New construction is adding to supply, and borrowers are trying to move. They are starting to move up, which is freeing up units below them. So you get higher priced condos, you get homeowners who are selling their first time home buyer purchase condos to move into a bigger condo or a townhome. But I tell you, the rising HOA fees and insurance costs are keeping this market cool. Again, we're at near all-time highs for condos available and active inventory right now. But I tell you what, here's the thing: a median condo price, you saw it at $528,000, still very affordable for most buyers, many buyers across the island. There are a lot of condos below $500,000. We're talking in the $300,000s, which keeps your monthly payment. And it's not about the price of the home that matters, it's a monthly payment. And if you can get a seller to sell you a home and give you credits to cover closing costs, so low money, no money out of pocket, and having a lower mortgage rate, at least for the first year, maybe first 2 or up to 5 years, well, guess what? You're now affordable home, and you can weather this storm that we're in so that you can get a lower rate as we go further into over the course of the rest of the decade. And really, for first-time home buyers, this is the most accessible entry point right now. Single-family homes. Hey, you know what? Those home prices are still climbing. We just saw 1.24 million plus. There isn't much land left, folks. And we are pretty much capped out there. Yes, we got some land where we can build, but single family homes, they take up more space. There's not as much opportunity to add to the inventory. Demand keeps rising. Every client I talk to is right in that 800 to 1.1 million. They don't range, pre-approval range. They don't want a condo. They want a single family home. Again, the demand is super strong. I will tell you this though, the lock-in effect that many people have felt, and lock-in effect is people who have a low interest rate and they don't want to give that up to go buy another home. Some people are being forced to sell. They have to sell. They're moving off island, especially if they're military, and they don't want to have to deal with the burden of having a rental property. It's starting to put more single family homes on the market. But if you're waiting for prices to come down, you're going to keep waiting. Prices are expected to keep rising, and waiting doesn't get you a discount on single family homes. Based on this, if rates stay kind of where they're at over the next year and a half, just like they've been in the last 4 years, you know what? Waiting for the Fed, it's going to be a losing proposition for you, because guess what? Home prices are still going up. All right, lock in today on the rate. When rates dip, and they have dipped every year for maybe a couple days, maybe a couple weeks, you refinance when you have that opportunity to keep you in that affordable payment range. But if you're waiting and you're gonna pay more later, and you're gonna have more competition for the home that you wanna buy, because when rates come down, everybody comes out of the woodwork because they all know it's better to pay your own mortgage than somebody else's. All right, so what can you do right now to make sure you're ready to buy? Get pre-approved. Know what your buying power is. Know what your sweet spot on your budget for your mortgage payment. Again, we got two things. We got the purchase price, but what's more important is what can we do with your mortgage payment to make it affordable so you're not eating ramen for 3 meals a day. All right, you're not a college student anymore, and your kids may like it, but guess what? It gets old. There's way too much sodium in that stuff anyway. Also, ask me about some of those VA first-time homebuyer options that are out there. They're built for this exact market, especially in the condo realm. And let's run your numbers. Let's run your numbers against today's pricing. I tell you what, I pre-approve a lot of people, and we do what I call a pre-approval plus. That doesn't tell you what you're pre-approved for. That tells you what your budget is what budget is gonna work for you. Because again, it's not the price, it's the payment. It's the monthly payment that counts. All right, a great report from UHERO. Don't always agree with them, but I think they were spot on with what they were talking about. Now we're gonna talk about something that excites me. This is the Trump accounts that just went into effect on 5 July. Now, I don't care what you think of the name. And you got to judge this thing by its merits. This is a real planning tool. The core thesis here is, at first glance, man, Trump accounts, they look like the worst of both worlds. You get no tax deduction going in, kind of like a Roth IRA, but your tax coming out like a traditional IRA. So you're getting taxed on both ends. But there's one rule that changes everything. And once that the account owner turns 18, all right, it can be converted into a Roth IRA. Even though that 18-year-old may not have income, you can still, based on tax laws, you can still convert that IRA from traditional to Roth. And that is huge, because now that child will be able to run that money all the way through retirement age and will make millions of dollars. That's right, and it's tax-free. So let's break this down a little bit. Big picture. All right, if your child was born between 2025 and 2028, basically the time that President Trump is in office, they will get a one-time $1,000 seed deposit in their account. That's $1,000 free money. A newborn child, $1,000 that grows tax-free over 18 years. That is the beauty of compound interest, my friend. And you can the max amount that you can supply into this account is $5,000. No matter what, you can't be $5,000 from your grandparents, $5,000 from mom and dad. It's $5,000, and at 18 it converts to a traditional IRA. Now let's break this down just a little more. In that first year, you could go up to $6,000 because you get that $1,000 kicker from the government. And that's the Fed. That's a one time. You don't get it every year. You get it one time. Anybody can pretty much put in the $5,000. All right. It's after tax dollars, parents, family, friends. Your employer can put up to $2,500 a year into your child's Trump account. Now, that's not taxed by, you're not taxed by it. The employer gets taxed and he has a tax benefit, but the employer can go up to $2,500 per child. All right, and the other $2,500 could come from you. So it's kind of like a 401k, it's a matching 401k. Your employer's paying the taxes, not you. Your child is making out. Charities or governments, you can have qualified general contributions. I won't get into that too much, but there are options for funding this account. Here's some of the rules. The fund must be held in a diversified low-fee index fund tracking U.S. stocks. Again, putting money into this stock market. There are no withdrawals allowed until the growth period ends. Contributions are not tax deductible, all right, for the child or the giver. They're tax deferred while they're earning. And while they're earning, they are tax deferred. Excess contributions above the $5,000 trigger a 6% annual penalty. So you want to just go $5,000 a year. Now let's talk about the Roth conversion strategy and what makes this a really, really great wealth building tool for your child. And I'm telling you right now, both of my grandsons are going to use this account. All right. And I'm not putting money into it because I know that my son-in-law and daughter are, but I got some other things I'm doing. But let's talk about this, how the Roth conversion strategy works. So, and this is really the centerpiece right here. All right, at 18, that account converts into a traditional IRA. So you have two buckets. You have the after-tax basis, what was actually contributed, no deduction was ever taken, and you got your pre-tax earnings, the investment growth, and anything that has not been taxed. So you convert, fund and invest up until they're 18. Then it transitions over to a traditional IRA on January 1st of the year the child turns 18. All right, it automatically converts. Now, this is where the adult, the owner, can convert some or all of that balance to a Roth IRA, which is a taxable event in the year it happens. But if the child isn't working, they are more than likely going to be able to offset, especially if they're in college, they're going to be able to basically not pay taxes on that because that will go towards their taxable income, and they get a standard deduction every year. So pretty good. Well, what if you're working? What if your child's making money? You don't want to pay taxes on everything. So what you do is it's called Roth chunking, and you convert gradually into a Roth IRA. So each year's taxable amount stays inside that lowest tax bracket limits. Again, minimizing the tax bill. You don't want to pay Uncle Sam more than you have to, but this is a great opportunity. And as you transition everything from traditional to Roth IRA, you are going on that tax-free growth for life train. Once inside that Roth, all future growth and qualified withdrawals in retirement are entirely tax-free. That is pretty amazing. Now, let's break down the numbers, because that's where the magic happens. The beauty, the power of compounding interest. If you have a child who's born 25 to 28 and you put $5,000 a year in from the start, you could probably get up to about 6 million, maybe 6 to 8 million. I've seen 8 million in tax-free money by the time they turn 60. You know, some people might say, oh, that's bullshit. Well, you know what? Most of the people who are saying that haven't really taken advantage of the true power of compound interest. They probably don't have close to that. All right, and $1 million isn't that much in 20 years. You know, they were saying that 20 years ago, and I tell you what, most people still don't have $1 million. You know what? $1 million makes a difference. But let's say you're starting at age 6. Your child was born in 2020. You open an account at 2026 at age 6. You fund it $5,000 a year through age 17, and then convert it to a Roth IRA left to grow at 8% a year. So let's break this down. 2026, $5,000. 2038 at age 18, that's final contribution. The value at age 18 of that Trump account at 8% per year will be about $102,000. That's pretty solid. All right, now you convert that over with the standard deduction. You convert that over to a Roth IRA over the course of the next 3 years. By 2080, when they're age 60, they are going to be at about $2.6 million in that Roth IRA. Again, this isn't a Roth IRA that they work to put money in. That money was just there. Talk about building the legacy for your family, for your children. You want to be remembered forever? You have that Trump account. They're going to know who did it, mom and dad. And you know what? Wouldn't you like to do that? Wouldn't you like to leave that legacy for your children? 2.6 million, that's if you start at age 6. You start at age 0 when they're born. That's a lot more money than that. Again, and it's only 3 or 4 years more. But you know what? That's the power of compound interest. All right, so 42 years, tax-free growth in that Roth IRA. Now, again, this is hypothetical, you know, because we don't know what the markets will do, and real markets don't return a flat 8% per year, and it assumes that the full contribution is made every single year, and the conversion is executed properly. And obviously, you want to talk to a financial advisor, but I tell you what, this is an incredible opportunity to build wealth for your legacy, for your children. And you know what? Some people say, well, I don't want to do that. I want to do a 529. You should do a 529. I would not use this to fund college. Again, this is legacy wealth building tool right here. If you want money for college, do a 529. There's very little tax. There's no minimum or there's no contribution limit on a 529. There are usage limits, but use a 529 for college. Use a Trump account to build wealth. Great tool. I know for myself, my 2 grandchildren, they both have Trump accounts, or one of them will as soon as he gets a social security number. But they will have Trump accounts, and guess what? Grandpa, G-Man, G-Money is putting in money into their 529 to make sure that they don't ever have to pay for college. So between the two of us, between the parents and the grandparents, we are taking care of our down the line legacy, and you should too. Woo! I got fired up, man. I tell you what, I love my parents, and you know, if things were different, they would have done the same thing. They weren't. But you have an opportunity to really make a difference for your children, for your grandchildren, and for your legacy down the road, man. That's so important. You know, you look at it ain't about the car you drive. It ain't about the roof over your head. It's about what you instill in your family, what you're able to give them from you, from your bank. Man, I tell you what, it's part of the legacy that you can leave. Your legacy is built of many things. All right, it's how you treat people. It's how you raise your children, but it's also about how you are able to take care of your children financially so that they and their children won't ever get into a position where they are lacking in money to do the things that they want to, and more importantly, need to do to survive in society. Now let's take a look at interest rates. VA rates, they're up for the week. We are back near 1-year highs at 6.25 is the average VA rate right now. Conventional above 6.5, closer to 6.7%. And the reason for it this week, President Trump saying the ceasefire was ending multiple times while he was in Turkey, us going in and basically schwacking much of Iran again, and that has really put a scare in markets. But you know the interesting thing, fuel prices aren't that up. Oil prices aren't up that much. They were in the 60s last week. They're in the low 70s right now. But you know, we just don't know what's going to happen. And so that is creating volatility in the market. I would expect interest rates to stay above 6% in the short term until we get positive movement, until we get better flow of traffic through the Strait of Hormuz. And you know what? Next week, there's not a lot of news coming out economic-wise. I think we might get a GDP report, but there's not a lot of economic news. And what that typically means, in the lack of economic news, what you typically get, you get a lot of volatility because people talking and overreactions and people basically, giving on, pontificating about what they think is going to happen, but really rates move based. Ultimately, the movement sticks based on the economic numbers that come out. All right, that's all I got for you this week. Have a great weekend. Aloha.